as well. But look at this right here. We just pushed through. This is a huge, huge move. And this is what we talked about before. If you have an impulse move down and you clean work right through that midpoint and start to push up, oftentimes you can go 50% higher and 100% higher of that original range right off the bat. You don't see that very often, but man, is it strong. Here, let's look at this high right here. It's 47.57. We'll do an extension down here. And here's a low, and that's 46.94. So there it is. So the 100% target on the expansion from the range is 48.20. So right here, it went up to it, kind of messed around for a second, pushed up, tried it, failed, and then came back in higher loaded gold. Man. Yeah, absolutely, Scott. Me too. Me too. I've definitely been burned by not taking those profits when you have it there, and then you let it come back against you, and that is a much more painful way to end the day than having made money and seeing it go some more. You know, that's a good people problem right there, and having this in your hand and then watching it go over here and hit you because you're expecting that's a bad people problem right there, right? So I know it kind of sucks seeing it go forward, but there's always the retrade. One of my favorite things is when you're making money and you're hitting on a few trades, you've got a hot hand. It's like, you know, being at the tables in Vegas. I love the craps table. You got great odds, and when everybody's feeling the energy and it's flowing, you just keep riding the wave. So if you were able to ride perfectly 47.06 up to this zone here, that's a great move. You've got a hot hand, and now you have, you know, some house money here, perhaps. And so if you see this thing push through and start to hold as that's one of our key patterns, you can let a little bit more ride there because you got a hot hand. You're seeing it right. The pace and tempo of the market is right. You know, there's some times where you want to step on the gas and trade a little bit more, and there's other times where you want to kind of let off. This is a good active market right now. Look at that. Now this is what we mentioned yesterday too, right? We were looking for some sort of squeeze to come. But yesterday was a digestion day. Yesterday was just a digestion day, and there was a couple of digestion days here. And I said, wait for this to be a digestion day. That's a good thing. Because the next day could very well be a huge squeeze day like we saw here. This was the digestion day we pointed out. And I said, wait for it, because Sunday or Monday we could see the beginning of a big sell-off through that level. And then Tuesday we may want to defend here. That's what I said on Friday morning, right? And then yesterday we were talking about the similarities in these moves. I said, now whereas this one was the digestion at the end of a move, now this one is the digestion at the end of the move. And so above those highs, squeeze is big. And that's what we're seeing right now. We're seeing a huge squeeze. And now we've come right back into the previous low right here. And that's why we halted where we did. So we've got a big range. Based on average daily range, though, we just only hit the 100% target. We have not hit 125 just yet. But this is a pretty decent high range. I mean, the crude oil has been very active here, so it's had a high volatility streak. And it's hit the 100% target 3 of 5 days this week. This one was not because it was a digestion day. This one was not because it was also digestion. This was significant digestion, and look at how small the daily range was on that day. You can just scan opportunities just for that right there. When it's super tiny, because what could come is a big day afterward. So this low back here is 48.55. What a move though. And look at how it's sitting on top of that 100% target here. So here's our key range. There's the expansion, there's the push through, and now it's holding right on it. So there's buy stops above, or buyers defending above, there's sell stops below, and if price pushes through this level, 47.88, 47.57 could be the next levels down. We're starting to see price give up 48s now in crude. You can see the 48.55 level or thereabouts, right at that prior low, was rejected yet again. Prices above this high here were rejected. The top of the pivot range rejected. So crude oil giving some back right now. Again, we were just going based off of price. We're not using any fancy indicators or anything. We did this impulse range because it's a market-generated key range. This is the Janet Yellen inspired key range. We saw movement off of it. We've seen a move right to the 100% expansion target. We saw price try to hold. And I said if it fails, the next level down is here. And we just hit it to the tick, 47.88. And the next one below that is going to be 47.57. So this is exactly what we talked about just a little bit ago. It's starting to play out. Additionally, right here, when price goes down and it comes back, right there is a chance to re-enter or enter that trade. This is my primary entry point. When it's breaking here, I don't like to get in. I like to let the market prove that it can get some traction in that direction so that when it shakes it out, I'm somewhere right here. You either got a limit sitting there at 48.20 or you let it hit and reject and then you come in over here and take off one of these points. But you're trying to get in on the move. Let the market test everything else first. This is still a good move. You can put a stop market order there and stop into that trade, but you know, it's all about preference. And I succeed better when I let the market go, and then when it comes back, I'm in at this level. And then that's when you're able to pinpoint your target zones, right? If we think it's going to go from 48.20 to 47.88, you can actually get that move because once it goes here, your limit can be sitting there. And then boom, you can have a profit target sitting there. There's a first major chunk off your trade, and now you're looking for the next one to come into play, 47.57. Now that's the next one in, and you can see some profit taking coming in right now. And that's where your next major target is, and now that trade is complete. And now you log that one into your, into your account. Boom. There it is. You can put it on your spreadsheet where you're doing a trade journal and say, okay, my objective was X, Y, and Z, and I accomplished it. And that's it. This thing can keep going this way. Who knows what's going to happen now, but the primary idea was if it can't hold above the top of the key range here, that 100% target, then you re-auction back toward the top of the expansion point. These are foundational market concepts that just continue to work. And that's why I focus more on pure price-based analysis than anything else. And then volume-based analysis, pure volume-based analysis. And then we trade based off of value and rejection. And so right now, this was just a clean little example here of what we were looking for, setting it up earlier. If it can't hold that level, we know exactly what to look for. And again, it's the art of identifying the most probable, the most likely profit targets that are going to be hit. This one and this one were the most likely targets to be hit if price were to give up this level. And they came perfectly into both of those targets. I could have said here, or I could have said here, or I could have looked for a home run, but the chances of that happening far, far, far less than getting what's in front of you. So I always say it's the art of not only identifying the most likely targets to be reached, but it's also the art of understanding where to position yourself in terms of trade location on executing that entry order, right? You're looking for something to happen here. You're looking for a good move to happen. If so, when it pulls back, there's a retest opportunity there. And then all of a sudden, you have a high score. I always scored myself in my trade journals by using a ratio. It's maximum adverse excursion versus maximum favorable excursion while you're in the trade. Adverse excursion is how much does the trade go against you while you're in the trade, and how maximum favorable is how much does your trade go in your favor while you're in the trade. So say you were able to execute an entry, here, 48.20, 48.18. Based off of your retest here, it doesn't really go against you, ever. Maybe it goes against you 1 tick, 2 ticks, right? And then boom, price goes in your favor from 48.20 up to 47.60. It's a big move. It's that's 60 ticks right there. So it's a 60-to-1 ratio. Favorable to adverse, 60-to-1. That's huge. I always tried to see how high I could get this score. Because, what if you got into crude oil? Say you got in short, I don't know where. Say you got in short here because you thought it was going to break. Then it comes up here and goes against you 12 ticks. And then when price got here, you were so happy that you didn't take a loss that you just take a plus 12. And you're like, oh, good, I'm glad I'm out of that. That scared me. Now your adverse excursion versus your favorable excursion is a 1-to-1 because you let it go against you 12 ticks, and then you took a 12-tick gain because you were so scared. This is not what you want to do. So if the lower that ratio is, the worse. I'd like to get that favorable excursion in my favor big time and look for minimal adverse excursion. So that's just a little ratio that I always used as kind of my score. If you want to score a trade, there's many ways to score a trade. I think for some of you that are old OmniTrader users or current OmniTrader users, they always had the advisor rating, I think it was called, the ADV, the advisor rating. And that was kind of Ed's way of scoring a signal. A buy signal looked like a triangle this way, a sell signal looked like a triangle this way. How can I get confidence if that signal's good? So they scored it with an advisor rating, and this score came from a lot of different things, accuracy of the signal or profit per trade or blah, blah, blah over X amount of back look. So there was a lot that went into this score to say if that was a good signal you could follow. And nobody ever really understood what went behind it. But when you're scoring something, you want it to be easy, you want it to be effective. And so for me to score an actual trade, the way I gave it a score was adverse versus favorable and just use that ratio. And that was a score. And so, it told me which ones weren't good, which ones were bad. So then you can sort. You sort your column by that ratio and the cream rises to the top. And then you look over to the left and you say, I trade crude oil much better than I've been trading ES lately because down here at the bottom of the sort are the poor ones, right? In terms of the ratio. Or you can say, this trade setup, whatever it may be, works way better than this trade setup down here because down here, this trade setup doesn't do me as well, but this one's working much, much better. Or this exit methodology or whatever. So you could use that score to then go back and cross-reference and see what your strengths are, what your weaknesses are. And if I find any weaknesses down to the bottom, I work on them very hard until they become strengths. It's the old Michael Jordan training effect, right? Michael Jordan would train so hard on whatever he was weakest at until he became strong at it. Working with your left hand, dribbling or shooting until it becomes so good it's as good as your dominant. Or working on three-pointers until it becomes a strong part of your game instead of not being good at it. I remember that one time in the playoffs, Michael Jordan against Clyde Drexler, and they were saying before the game, it was the finals, and they were like, hey, Michael Jordan, you do so many things great, but Clyde Drexler knows how to hit a three-pointer. You think that's going to help them in this game? So then what did he do? He went out there and drained the most three-pointers in a half ever in a finals game because he took that as a challenge and went out there. But that's how he was, right? To become the best, you got to work on what you're weakest at. So, that's what I would do. I'd use my spreadsheet there, and I'd go back and look at the trades that I wasn't doing as good in and figure out why. Just a little bit there. In terms of identifying these charts, identifying what to do, getting the proper move, and then scoring it on your score sheet, because that's a win. That's a huge win. And look at it. Just going right back to proper placements, right back at the breakout point, and that's the entire move. That's the goal. When the market is moving, look at the pace and tempo of crude oil right now. The pace and tempo is so much different than the pace and tempo that we've seen recently. You go back here, look at yesterday, right? Look at the pace and tempo here. It's very poor. The pace and tempo right now is much better, much more fluid. That's when you can knock out some good trades there, get in and get out, and take what the market gives you. So really, really nice there with regards to crude oil.